us now to break down the winners and losers of the federal budget is Ben Nash from Pivot Wealth. Ben, let's talk about it. The Treasurer has called this ambitious. Is that how you would describe the budget?
Look, I think it's probably a pretty fair comment. There are some pretty substantial changes. I think Jim Chalmers has effectively rewritten the rule book for investors and people trying to get ahead. We're seeing some big shifts, the big headlines around the changes to the property investments, negative gearing, capital gains tax, and there are a few winners and losers. So I'd say, yeah, it's a pretty big budget overall. Definitely lots to talk about.
Well, I think the big one to begin with in terms of winners is the tax cuts for working Australians. How much will they get and when will they see it?
Yeah, so it's a $250 tax saving, essentially, that they're reducing the tax rate on income earned between $18,000 and $45,000 from 16% to 15%. So it's a 1% tax cut. That kicks in in the 2028 financial year, essentially. So we are waiting a bit, and that's partly, I think, to ensure that it's not too inflationary in terms of giving people money. They have also added this $1,000 automatic deduction in people's tax returns. And so the government was big on talking about that combined with existing measures gives people $2,800 or $54 a week was the number that they spoke about. But realistically, the new measures are $250 saving maximum plus $1,000 deduction. So you're talking about sort of $500 to $750. It's definitely appreciated, but it's not really massively moving the dial, I don't think.
All right, so Chalmers has axed negative gearing and overhauled capital gains tax. This is to address generational inequality here. So this is going to change the playing field for a lot of people.
Yeah, look, I think that it will, well, from their forecast, they're saying that they feel that it will have a 2% reduction in house price growth. So they're not saying that property prices will go backwards. In fact, they're explicitly saying that they're not expecting property prices to go down. Right. They're simply saying that the pace of growth will be reduced by about 2%.
Instead of increasing by 6%, it'll increase by 4%.
Exactly. And so that should help people then to get their first home and get into the property market. The other side of that, though, is the fact that a lot of people, they're trying to create their financial security and build their wealth for the future, and the changes to negative gearing and capital gains tax will make it much, much harder. And so I do really question, will the benefits that you get from that one element of your financial strategy, will they be outweighed by all of the downside that you're copping in other areas?
Well, what does this mean for rent vestors? You know, a lot of young people have been told the best way for you to get into the market these days is to rent vest. If they're not already in the market and now they can't negatively gear, does that hamper those plans? Yeah,
it will be a big shift to that strategy. So existing investors are grandfathered with negative gearing, and that is positive news, I think, given the tough talk that was coming out ahead of the budget. They were talking about scrapping negative gearing, no grandfathering altogether. So anyone that is rent vesting now will be able to continue with that strategy, but it does significantly change the cash flow of it for people moving forward. And that's what I mean when I say that, like, we're sort of shifting the wealth playbook, that people, I think it's much more important now than ever before that people are really on top of their planning, running their numbers. And I think people that will benefit from this the most are the ones that are going to be on top of their structure and get good advice around that as well.
Let's talk about super then, because that was something that was exempt from tax changes.
Yes.
That makes it super appealing for a lot of people out there. So what steps can people out there do today to maximise their super balances?
Yeah, so no specific changes to superannuation, but the fact is that they're not applying these rules around negative gearing or capital gains tax, which is definitely preferred, and I suppose it tilts the scales back towards superannuation. The tax benefits of building your super have always been pretty significant. Every Australian worker is able to put $30,000 a year into their super fund and claim a tax deduction for that money, which includes any money that's put in there from their employer. But importantly, once it gets into your super fund, it's in that concessional tax environment, maximum tax rate of 15%, only 10% on capital gains held for longer than 12 months. And for people that are looking at property inside their superannuation, you can still negatively gear that property inside your super fund.
Okay.
There was a lot of pressure on the government heading into this budget around its own spending and inflationary pressures as a result.
Yes.
When we look at their forecasts in the years ahead, they've been pretty optimistic when it comes to things like inflation and GDP, much more optimistic than, say, the RBA. Do you trust the numbers in this budget when it comes to economic forecasts?
Well, look, I think if the last few years have taught us anything, is that the forecast, you've got to take it with a grain of salt, really. You can see a variance clearly between what the RBA has projected and what the government is saying. The government's looking at it more favourably on inflation, that potentially rates will come down sooner. But time will tell on that. Clearly, the RBA is taking a fairly aggressive stance on inflation, and they are still expecting it to increase further. And so I suppose time will tell in terms of who's right there.
Is there anything in the budget for pensioners?
No specific changes, apart from the fact that they're carved out from these changes to the capital gains tax minimum rate of 30% that applies. So basically, any people receiving the age pension or any other government benefits, for that matter, are exempt from that 30% minimum floor on capital gains tax.
Okay, it was a convoluted and complicated budget. We appreciate you coming in and breaking it all down for us, Ben. Thanks so much for joining us this morning.